So above every days there are liquidity. Look at this side. This is a buy side. This is a buy. I told that every chart has an old high and then an old low. Every chart has an old high and an old low. Let's use the gold. Let me use a gold. Okay, let's use a DSY step. So these ones become support and resistance. These are becoming the so. Let me use this indicator. It doesn't really give me what I'm looking for. Looking at what I'm looking for. So let's stick to the weekly time frame. So whenever price is moving, I want you to take your note and write something. Whenever price is moving, price is either targeting an old low, an old high, or inefficiencies. Whenever price is moving, can you hear me? It's raining at my end. So whenever price moving is either targeting an old high, an old low, or inefficiency. So let's see something. Let's start from this day. Let me see. Let's start from this day. When price moved here, when price moved here, it went to create a high here. Price created a high here. Price created a high. So let's call this one a new high. Let's pretend this that is not here. Let's go back. This is a paid for trading view, so maybe you might not get what this is a paid for trading view, so you might not get what you might not get it unless you buy it. So please let's take this as example. This an old high. old high. Where's at the lows? This become an old low. Let me use just a line. This become an old low. The low of this is 101,040. 101,040. This is an old high. This is also an old high. The high of this is 104,643. So let me see this. Whenever I'm thinking to use whenever price is moving, price is targeting an old high, an old low, or inefficiencies. So this is an old high. This is an old high. So let's see how it goes. Let's see how it goes. This is an old high. This is an old low. Let's see how it goes. And I told you above here is liquidity. When price is moving, look at this place. There's no space here. These are what we call inefficiencies. Price was inefficient here. Whenever price is moving, it moves this way. It goes up. It creates, this is a bullish thing, but it has to be a retracement a little, and then goes, come down, create, sometimes come down again to create, come down, create. But there has to be work done around this side. This is a bullish, this is a bearish, this is a bullish, this is a bearish. Price doesn't move in a linear range, else everybody will be rich. Price has to be moving up and down, up and down. So immediately price moved here, this body has to cross this body. It moved, but as it moved, it has to give people the access to buy. But when you move from here to here, it didn't allow people to buy. There was no selling or buying here. This place, there's no selling. So this one become an inefficient move. Whoever is coming in, I can't join. I can't allow anybody in now. Next time they'll come early. Because if I allow somebody to join, I'm going to lose this video. So this place become what? Inefficient. This become inefficient. So whenever price is moving, price is targeting. There is liquidity here. Liquidity. There's liquidity here. Above every high. There's liquidity here because somebody is waiting that until price. Somebody said, okay, when price comes to 101.48, I will buy. Somebody said when price come to 101.0119, I will buy. Somebody said, okay, when price comes here, so price have to be fair. It has to be fair. So let's see what happens. So let's see. Price came here. There's no space here. There's no wick here. So price cannot just come down. It has to come and take the liquidity here. So as of now, price has taken the liquidity here, taking liquidity here. Let's see what happens again. Please, if your mic is on, kindly turn it off, please. So price just came to take liquidity here. Above every high, there's an old low. There's a liquidity. Above every high, there's liquidity. Let me fast forward this and see. So after taking it, it created a new high here. So what I'm teaching you right now, don't be confused. When you have time, go through the chart very well. Above every high, there's liquidity. This one took a whole week. This 1 week, this another week, this another week. I'm not talking about this, I'm talking a week. This 1 week. This is what happened within 1 week. Here is a high. Here is a high. Price has to take liquidity above these things. But these things were programmed by human beings. These things were programmed by men, and they are inefficiencies. There are inefficiencies within them. There are inefficiencies. So whenever price is moving, price is targeting an old high, an old low. After targeting this old high, it creates a new high. That's what price is doing. After taking off this one, it creates a new high. But you realize that when price moved, it created what? An inefficiency here. Here it is only buyers. For this side, there's no buyer, there's no seller. There is no buyer, there is no seller. At this side, there's no buyer, there's no seller. This side. So this is a liquidity void. This is void of liquidity, void of buyers. There's no buyer, there's no seller here. Liquidity, liquidity void. So my question will be, what is a liquidity void? It is. What is a liquidity void? What is a liquidity void? It it is an area in the forex market where there is no buyer or seller. There was no transaction in this said there's no transaction in this said location. Let's say location or something, or region. There's no sorry there's no there's no seller, there's no selling or buying in this location. There's a liquidity void. There's a liquidity void. Anytime you come to the market, you have to look for a liquidity void. You have to look for a liquidity void. Look for it. Take your pen and paper. Anytime you open your market, anytime you want to come, you look for a liquidity. This week, has there been a void created? Or today, has there been a void created? This is a liquidity void. This is a liquidity void. And then we are going to talk about fair value. So today, we discussed what? One, we talked about buy side. No, we talked about old highs. Today we talked about old highs. Number two, old lows. And then I added three, sell side liquidity. And then we talked about buy side liquidity. And then we talked about inefficiencies. And then we stated example of inefficiency as 3A. That'll be liquidity void. So this is what we studied today. I don't want to go ahead. I want to, and we talked about what a liquidity void is. A liquidity void is an area or region in the market that has no buying and selling. So my assignment for you today is, I want you to go into the market, look for where there is liquidity void. That's what I always want you to do. Just liquidity void. And I want to add you one assignment extra. It's going to be difficult. It's going to be tiring, but if you are really if you have a difficult training, the easier the better. I wouldn't babysit anybody here. I wouldn't babysit anybody here. I will not babysit anybody here. It's a serious business. This can change your life forever. It's going to make you a multi-millionaire. It's going to make you a generational thinker. You are going to have a lot of cash. So I want you to take this like a PhD. Yeah, you have to take it like your life hangs on it. You have to just take it as a PhD. Yeah, you have to take this as a PhD. And then this also on a liquidity void. This is a liquidity void. I'll give you an example here. So you can take any chart of your choice. This is a DXY. And please, the DSY, you when you want to get it, you come here. I think this okay.